Clark Neighbors with B.I.S. Commodities with the summary for the week ending June 15, 2012. We're in the process of starting a new idea, a new communication type situation in regards to using YouTube, tying this in with Twitter, and also our website. So on a weekly basis you can watch this recap as far as ideas, different thoughts from some of the different brokers in the office, and we're going to try this on a weekly basis. In regards to this week, on corn and soybeans, first of all for the week, we ended the week with July corn down 16 cents, December corn down 36 cents, July soybeans down 48, and November beans down 17 cents. The main highlights of this week was spread activity. July D's corn spread had about a 30-cent trading range this week. A lot of that's due to the high basis, strong cash markets we've seen. I'll touch more on that in a little briefly a little later. Movement, ethanol business, exports are going to continue to be talked about. There was the supply and demand update this week on corn. Showed no changes on the supply and demand. Many in the trade were looking for an increase in ethanol usage and a slight decrease in exports. Nothing really changed to that degree. Exports in corn have been very, very disappointing over the last 5 to 6 weeks, well below what the trade estimates need to reach the USDA projections. On the other side of the coin, many in the trade are also looking for an increase in ethanol usage as demand continues to be fairly strong in that sector, but we'll talk about that more later. Soybeans on the report this past Tuesday were strong with very tight stocks, not only in the old crop but also the new crop as we progress. Technically speaking, December corn futures, first of all, trading range over the last 30 days or so is 550 to 505. Today, on Friday the 15th, this is the lowest close in December corn in a month. On November soybeans, kind of similar situation. Trading range over the last 30 days has been 1250 to 1350. Today we hit the 100-day moving average, which should be support at this time at around 1306. Some upcoming events to look at in regards to reports. Keep in mind Monday it will be our next crop ratings report. Trade's looking for some decreases in the crop ratings. Next Friday, cattle on feed report for the month of June. Also, the July options expire next Friday, which could have some impact on the July futures as we approach deliveries. And then the next major grain report will be June 29th, 2 weeks from today. On a Friday, it'll be the stocks and planting report, so we'll get an update on the final planting number and also quarterly stocks. So those will be very key. Keep in mind these quarterly stocks report over the last couple of years have had some pretty major impacts on price reaction coming out of those reports. In a preliminary report put out by a private firm called Informa today, they talked about 96.8 million acres of corn, 76 million acres for beans. That compares to the March USDA number of 95.9 million acres on corn. This would be about a 9.9 million acreage increase on the corn, and the beans a little over a 2 million acreage increase. Keep in mind with the early harvested wheat and also the early planting season, and also a big run in the soybeans since early March when these early numbers were put together, we could see a pretty dramatic increase on soybean acres, especially in these double crop acres. So that's something to keep in mind as we approach the end of the month. Even though we have these tight stocks numbers, it looks like the USDA is trying to hold kind of a credible level as far as carrying out for the new crop. But we could see, at least from an acreage standpoint, a pretty significant increase on acres at the end of the month. Some key swing factors to look at. Europe this weekend, the Greeks are having another vote on how to hold office, who's going to be in control of the Greek authority, and whether they want to stay with the EU or not. There's a lot of uncertainty in Europe. That story does not want to go away. The Germans this week, in fact, said they cannot solve the crisis alone. And right now, many in Europe feels, or in the world marketplace feel, they are the lone driver as far as the decision maker in what's going on in the EU. Weather obviously is going to be a very key factor over the next several weeks. By the time many of you watch this report through the weekend, early next week, we'll have a new weather forecast, so we're not going to go into great detail on that. But on today's break in the market, it seemed like the traders were looking for a little more of a non-impactive forecast for the Midwest over the next couple weeks. A little cooler, a little more chance of rain over the next couple of weeks, which is going to be very key as we go through the pollination standpoint. The other key swing factor is basis, or the cash markets in the grains. Keep in mind, we're at record basis levels. We have been at record basis levels in many cases for quite some time. Producer movement continues to be very, very quiet, even with exports struggling. There's still some demand in the domestic markets. As the driver of this basis right now has been, probably will continue to be that driver. Now keep in mind also, as we approach harvest, this huge inversion we have with the strong old crop prices over the new crop prices. At some point those have to come together to some degree. What creates that to come together and when, none of us know the answer, but I think there's two key things to watch. One, we either need to get to a point where we see strong producer movement, because that's where the ownership of the stocks lie right now. We'll find out more of that at the end of the month on the stocks report. Or we need to see some cutback in demand, and that cutback in demand cannot come from the export trade right now, because it's already pretty slim as far as the corn's concerned. So we may get to a point where margins get to a situation where ethanol plants either slow down or shut down some production. So those are the two ways that could have a pretty dramatic impact on nearby basis and or these inverted spreads as we go along. A couple of recommendations to watch. New crop corn, there seems to be a lot of interest on when to pull the trigger on the next level of corn. We've kind of been earmarking that 540 to 550 R&D's corn as a very solid number to make some strong sales if we get to that area. New crop sales at this point around the Midwest are very limited, and talking to many commercial clients and also producers in the Midwest, we have found out in our office that maybe 10% of the corn crop has been sold, which is a light amount for this time of year. So we get back to that mid 550 range, give or take, and it may take some weather to get back to that area. We need to get aggressive on using some cash sales, using some option strategies to get some additional sales put in place. As far as on soybeans, kind of the same thing. You get up in that 1325 to 1350 in the upper end of that recent range. That might be an excellent place to make some additional sales. Keep in mind, we're entering, as far as the grains are concerned, we're entering a very strong seasonality. We're mid-June, early July, on into harvest, unless you see weather issues or something that pops up late in the growing season. This is a strong seasonality time where the market tends to break or struggles to rally. Livestock, just briefly, cattle trade this week, 118, 119. They seem to put some pressure on the cattle trade. Should see some decent numbers over the next couple, 3 weeks to keep those numbers somewhat limited. Demand is a key ingredient on the cattle trade. The other thing to watch, the livestock trade and basically all the commodities as a whole are very integrated to the dollar. The dollar's had some good strength over the last month and a half. That can take away some of our exported advantages around the world. So keep in mind that's going to be something to watch. Today's the first day we've seen the dollar index drop below 82 in about the last month, but the dollar is still significantly higher than what we saw a couple of months ago. Please remember there are risks in trading futures and options. Our phone number here at the office is 800-373-2525. We'd sure like to hear your inputs on how you like these video broadcasts. And with that, this is Clark Neighbors, and we will see you next week.